All right, fellas. It was a pretty interesting day in the market today. We started up, we're holding up. It was pretty flat. It was a solid gain around 1.5%. We're kind of treading in that range. NASDAQ almost pushing towards 2%. It was a pretty solid, heavy day. Then towards the end of the day, some notable economist came on CNBC and was rather negative. Said a lot of the gains and the economic recovery won't be seen until the second half of the year, and the market quickly sold off. Now, it never went negative. It just dipped, but there was definitely a little bit of panic in that moment, and that's the name of the game right now. We're going to be in a choppy period. There's going to be a lot of, panic coming out when it needs to come out and all that. But what do you do here? What do? You be long-term optimistic. I do think we're going to remain flat and we're going to be in this range. And I do think that a lot of the economic recovery is going to take a little bit. It's not like we're going to go out and everything's going to be back to normal. There's probably going to be a 2-ish month transition period. But what does it mean to be long-term? Let's look at a company like Virgin Galactic. They just reported earnings. The stock's up 10% after hours. They lost $60 million this quarter. Any other company losing $60 million in a single quarter, we're not going to call them a company. We're going to call them, a gangster, something like that, somebody buying a ton of Lambos. But what's Virgin Galactic doing? They're trying to take people to space. They've barely made any money, very little money, just kind of outsourcing engineering services. But they're expecting to take people to space, and they've already pre-sold over 400 tickets. They've got 1,200 other people lined up. These are $250,000 tickets that are going to equate to $100 million just in that one batch. I believe a while ago they did sell 500 at the full price, maybe a slightly less price. They collected some $80 million already off of those 500 tickets in advance. But most importantly, they're working on a partnership with NASA to re-engineer spaceflight and earthly travel. Think about that. I'm willing to have a $60 million loss when they've got $419 million if they're doing something crazy like that. If they're creating such a fantastic product like revolutionary travel and taking me to space. So when we're investing here, don't, look for, we're going to get this earnings beat, or we're going to, have this rally, or do I got to avoid this dip? Obviously, if there's a big cyclical event like the coronavirus, which is going to turn off the entire economy, you got to play around that, the massive macro business cycles. But swings, pullbacks, they're nothing more than buying opportunities or selling opportunities. But at the end of the day, you have to be a long-term investor looking at companies who are doing things for the long term and finding value and creating a good partnership. When you're buying a stock, you're partnering in the company. You're becoming a business partner with the CEO and the other shareholders. So what companies do you want to be a partner in? One good thing I liked about Warren Buffett this weekend was he said that whole partnership spiel I just said. But he said, I honestly wish the markets weren't open all the time. Because sometimes you'll see a stock go down and then 4 years later it goes up. Why? Because it's a good partnership. But the markets being open every day allows them to be traded all the time, so they go like this. Okay? We got to ignore this, and we got to focus on companies that go like that over the long run. Virgin Galactic, I believe, is one of those. Now, I just talked about something Warren Buffett said that I liked. Something he said that I didn't like was that you should be investing in ETFs, and that he doesn't expect Berkshire to beat the S&P 500. He wouldn't bet his life on it. Well, I don't agree with that. There's a lot of trash in the S&P 500, and I don't want to own trash, right? I want to own winners. So I don't think you should invest in index funds. Obviously, if you're 19, 20 years old, you've got $1,000, sure, buy the S&P 500. That's a good idea. You'll just have that money tucked away and saved. But as soon as you start getting real money and want to see real returns, don't buy the S&P 500. Pick winners. Pick stocks that are going to do well that are making good products and companies that are well managed that should be around for the long term. Something like Disney, not going to go away. Pretty well valued. A lot of concern about it, but buy it and don't be afraid to see a little dip. Know that you're a part owner of Disney. Virgin Galactic, taking people to space, probably going to redo the entire airplane. Buy Virgin Galactic. Hold long term. That's how you make money. Index funds, sure, they generally go up over time with the market, but you're not maximizing your potential by holding losers, stocks that are going down, stocks that have seen their peak, that are at their peak. Bad management that is more focused on buybacks than reinvesting into innovation and the actual product that the company is outputting. So with that in mind, I'll see you tomorrow. Peace.